Here, thought I would do a video going on using the worksheet and then how to generate a balance sheet. This is based on question 4.27, so I did create this worksheet in a video in week 2, so by any chance you haven't watched that and you want to watch it and figure out how I created this, please jump into week 2 and you should see a video, week 2 discussion board, and you should see a video in there. But here I really wanted to show you how to use this and create a balance sheet. Next week I'll do it how to create our P&L, which what I've done is highlighted blue here, so all that information will create our P&L. But that's for next week's purpose, not for today's one. So what we want to do is use this worksheet to create a balance sheet, and why I really want to show you and create this video is because it forms part of our assessment too. And this worksheet is seriously amazing for creating balance sheets and P&Ls. It makes life so much easier, and the most difficult part you're going to get is actually creating the worksheet and how to enter in all these transactions here. So your critical piece of information / learnings that you really need to understand is how to interpret the transactions and then enter it correctly into the worksheet. Okay, so what's important is for this balance sheet here is these closing balances we have down the bottom here. Okay, so in accounting we have 5 accounts. We've got our assets, which we have up here, our liabilities, our equity, and then we also have our revenue and expenses. So what I've done here is you can see that's all in blue, our retained earnings, which is basically our P&L, so which we'll create next week, and that will cover our revenue and expenses. So right now we want to focus on our assets, our liabilities, and our equity. So what's going to be our critical pieces of information are these titles here. So our equity, now our equity is a bit more detailed. We'll need the titles of capital and retained earnings. And what's really important is we use these closing balances down here. So why is that? A balance sheet is looking at the position of asset, liability, and equity of a company at one point in time. Okay, whereas a P&L is looking at the revenues and expenses incurred over the past year or whatever period they're reporting. So I want to reiterate, balance sheet is at a point in time. So when we talk about the title, it's as at. I'll get to that in a second. So that's very important to know. So let's get down. This is our accounting equation here, which is basically our balance sheet, and that's what we're going to be building. So I've written balance sheet here. So let's just get started. Balance sheet. Now, we get marked on the titles of our balance sheet. So if you have a look at any financial statements, you'll always see a proper title, because it's important to state what period it's in relation to. So as I was just talking, balance sheet is always as at a point in time. So our title will always have our balance sheet, and then I'll have the 2 words as at, and then it will have the period in which it relates to. So in this case, we're doing it as at the 31st of July because that's what the question states. Okay, because we've got all the transactions during July and our closing balances are for the end of the 31st of July. Now, what you'll see in assessment 3 is when you come to actually look at a real set of financials is most balance sheets are as at the 30th of June, because a financial year is usually in Australia is the 1st of July to the 31st of June. Okay, so that's a stock standard financial year in Australia. Every company has to abide by that. Okay, so balance sheet, we've got the 3 components. We've got the assets, the liabilities, and the owner's equity. Now the assets, if we have a look up here, and the same for the liabilities, it's broken down into 2 sections, which I talked about in my previous video, current assets and non-current assets, and then we've got current liabilities and non-current liabilities. So I did talk about this in the previous one, but the difference between current and non-current, it's all about the life of whatever asset we're talking about. So current is when there's a life of under 12 months, and non-current is when there's a life over 12 months. Just have a watch that video I'm talking about in week 2 if you're completely unsure of what I'm talking about here. Now, what we want to do is we want to start building. Okay, so we're building a balance sheet as at the 31st of July. That's our closing balance there. So first let's go assets. So we're going to do our heading of that. Okay, now I'm going to show you how basically to use Excel, especially for the people that haven't used Excel before. Now, I'm going to be lazy and I'm not going to waste my time and rewrite, or actually I might write current assets. So I've written that here, that's my title. So remember, we've got current assets and then we've got non-current assets. Now I'm going to be a bit lazy, and instead of writing down all the details, so I've got to list my two accounts. I've got to list my cash at bank, my accounts receivable. I'm just going to press equals, then enter that, and it's automatically brought down my title. And I'm going to be a bit lazy again there and do the same for accounts receivable. Okay, so what we're doing is we're basically flipping this and really taking out our closing balances and preparing a balance sheet. Okay, so I've done that. And then what we want to do is now bring in our dollar amounts. I can either manually write down my closing balance, so this is my cash at bank, 40,170. Here I can manually write it, or I can use the same method just by pressing equals and then selecting the closing balance of accounts receivable there. Okay, so they're all my current assets. I don't have any more current assets here. I've got the total balances there. All I need to do is 40,000 plus 7,000, and that's giving me a total of 47,270 for my current assets. And if I highlighted those two, I can see a little sum. I'm doing it correctly. So non-current assets, we only have one non-current asset, which is our office equipment. So I'm doing my little cheat, pressing equals, and then we've got our non-current amount here. So that's our closing balance of the office equipment is $2,000 there. Now I'm just going to do a totals of that to make it look pretty, and our non-current assets equal $2,000. Now what we're going to do down here is go total assets. We're going to go equals 47 plus the 2,000, which is 49,270. How can I check if it's correct? Here, assets, we know should equal 49,270. They reconcile, boom, yay, we're done. We've done our asset side. Now, in terms of me as a marker, what's really important is to see this breakdown of the current assets, the non-current assets here, because we need to see that you're classifying it correctly, that you can identify what has a life under 12 months and what has a life over 12 months, okay? So if I had this up here under non-current if office equipment was under current assets, is that correct? No, it really should be under current assets, okay? So this is really important, why I said at the start of this video that your most challenging part of this is getting the transaction correct and understanding where your figures need to go within this worksheet. Building the balance sheet, it's not as difficult. All right, so we've done our first half, now we're doing our second half, which is our liabilities. What I might do is make that yellow just so we can color code everything. Liabilities. Let's make that green so you can see where I'm getting everything. So we know the total of liabilities has to be $200. If we jump up, we've got current liabilities and non-current liabilities. We've only got one account here under current liabilities. We don't have anything under non-current. So all we have to do is we have to go current liabilities. Sorry for any spelling errors. It's the reason why I did accounting and not English. So under current liabilities, we've got an account called accounts payable. So I'm bringing that down. We've got accounts payable there. The total of accounts payable, if we have a look here, the closing balance is $200 there. Let's do a little dollar sign so we know that that's currency. And that's it for our liabilities. We don't have any other accounts. By any chance we did have a loan account, and let's say, I don't know, there was a transaction for $10,000, then would have to go non-current liabilities, and then would do this, and then would do that, and total it. But that's not the case in this, so let's remove all of that. So I want to total that. We've only got our current liabilities, so we go total liabilities. I'm missing some I's in there. There we go. So that's our section of total liabilities done. So hopefully you can see this is for our assets and liabilities. All the information we need here is the top part. I'm going to bold it, and then our closing balances here. Okay, so that's our critical pieces of information, the bits I've bolded. So we've done that. Now we're moving on to equity. Equity is a little bit more detailed. So that's a blue color. Now, obviously, you don't need to do these color codes. I'm just doing this for your own benefit. Equity, we're not going to take these totals. We're going to break it down a little bit further. So what we want to do for equity is we want to take these titles. So I'm going to color code it. Let's do pink. I know that's very bright. Now we want to take the opening balances and we want to take the transactions within it. So this is where I'm going to highlight that pink. Oh, you can't really read that. Okay, I'll explain it in a second. So what's important with our equity is we're breaking it down. We're going to show our opening balances and we're going to show our transactions that have occurred throughout the transactions. So our P&L, as I mentioned, week 3 we'll learn this, but for your benefit right now, our profit or loss is the sum of the transactions that have occurred within. Now this will make more sense next week, but what I'm going to do is I'm going to sum those up here just for your benefit right now. So this will make sense next week. Okay, so when we come next week to do our profit and loss, our profit should come to 8,870, which is our closing balance here, by the way. By any chance, this had an opening balance of $100. You can see that this increases by an extra $100. Okay, so we're bringing forward the profit we made during the year and recording it in our equity. Okay, and then from our capital side, we've got our capital of 41,000, and this is a director drawing. So the director's taking it out. So we want to show that reduction in balance. So I know I've been waffling on, but let's first show our capital. So I'm going to write opening capital. Let's use my little cheat over the equals and 41,000. Then of our capital, what's happened during the period is we've had some drawings. So I'm going to write drawings equals that. So if we sum those up there, so we can see that little sum, it's 40,200, and we can see the closing balance is 40,200. So these will equal the closing balance, but when we show our equity, we just want to show a little bit more detail than we have for our assets and liabilities. Okay, opening retained earnings. Okay, we know that's 0, but I'm just going to do that there. And then what we want to do is we want to record our profit. Okay, so this figure here will be coming from our P&L, but what I've done is I've done a little cheat and just summed up those there. And that's 8,870. So if we highlighted those and summed those two up, you'll see down here, here's our sum. It's exactly the same as the closing balance. Okay, so in theory, we're taking our closing balances, to show you this for purpose, but in our equity section, we're just providing a bit more detail. So there's our closing balance there, and there's our closing balance there. A lot of the time, students don't provide this detail. They will just use the closing balance, and then we can't award full marks. So this is why we really want to go into the detail of breaking it up between showing the opening and then what's kind of occurred. By any chance, this figure here was a loss. How we would record a loss would then be just a negative sign. So we just go negative 8870 if it was a loss. So profit, positive figure, loss, negative figure. And then all we do is total equity. We sum it up. So it's that, plus that, plus that, plus that. $49,070, which if we sum those up, $49,070. So what we can now do is, does our balance sheet reconcile? So liabilities plus equity equals 2,000. Oh, what have I done there? $200 plus, oh geez, hang on, which equals 200 plus our equity of 49,000. Do these two equal? Yeah, they do. We've reconciled. Okay. So that is our balance sheet. That's done. So the hardest part here is our equity, because we do want to split that up here. And then all the information is given to us in the worksheet. So I really wanted to show you how we use the worksheet to reproduce our balance sheet. Okay, I really hope that helps.